The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back for another edition of the Daily Dots, and I'm joined as always by the brain trust himself, Mr. Chase Taylor. And in honor of Thanksgiving week, we are continuing our lack of a video feed. We're doing you a favor. You're just getting the audio, and you know that may not be pleasant, but it's better than having both audio and visual. So Chase,
it's convenient because I'm watching U of H and Notre Dame, so now people don't have to see me looking over my shoulder.
You know what? Speaking of which, pal, we might have a civil war on our hands. It is entirely possible that the Zags and your Cougars could face off in this tournament's championship game here.
Yeah, you guys. Oh, that. Yeah, we got smashed by Tennessee. Well,
you got beat in the first game.
No, second game. We beat Syracuse, but we lost to Tennessee yesterday.
Okay.
So I think we're done after this one.
Okay. All right. Yeah, we put it on Maryland pretty good last night. Got them by 40.
Well, never heard of them.
Yeah.
They were good in the 90s, but yeah.
Yeah. Who is Steve Francis? Remember him? Maryland?
I grew up in Houston, so yeah.
Yeah,
Stevie franchise was a big deal in H-Town.
That's right, man. He was. The good old days. Wasn't Camby on that team? Wasn't Marcus Camby on there with him? Or maybe not.
Not that I remember, but I think he had a Tracy McGrady overlap.
Oh, that's maybe. Right. Yeah, that's right. Anyway, well, hey, getting into the markets, rally on. Is today our first official close above the 50-day?
So, no, yesterday we closed above the 50-day, but we just closed very above the 50-day. And yesterday the Qs was like legitimately barely above, but today kind of marked a bigger move higher. But now you're above even shorter term moving averages. Above the Qs are above the downtrend line. SPY is kind of right at it. So
you got to see. I mean, technically,
today was the first day we were in positive gamma. Sorry.
Okay, so technically, you want to see for confirmation, you'd want to see a weekly close above those levels. But now we were joking about this morning. I mean, we could probably go back and do the numbers. I bet you probably 80%, 85% of Fridays after Thanksgiving are positive. Very rare that they're not. Yeah. And do you remember that one that I was talking about, though? It was probably 2 or 3 years ago. I want to say markets were down like 2.5%, 3% or something like that.
But what was that in December?
That happened too. That happened. There was a day. You know what? Maybe that was the same year. Maybe that day after Thanksgiving is what spurred off that nasty December. And I remember, I've told this story before, but I remember the market was open on Christmas Eve, and we actually had an up year that year. We finished up about 7 or 8%, and a big part of it was because we were short the indexes almost all of December, and we remember that crash happened so quick. So, you know, we were sitting on really nice gains. And it was one of those deals, especially when you're short, where you're like, okay, that was an awesome, fast move. And it was too fast. I got to take some profits and just step back and see where this goes. And I wish I could say there was more into it than that. It wasn't. It was just take your profits, get out of the way. Thank God I did. Because remember, the day after Christmas, I think you were up, you were limit up. I mean, just ripping higher through Christmas to the end of the year. But yeah, I would say, you want to see confirmation on Friday, but I also, what kind of confirmation is that? You know what I mean? Like, you're more than likely. I'd say you're probably, like I said, 85, 90% likely to probably get a green day and confirmation of holding those levels on a weekly basis. So
yeah, if anything, you're probably up 0.2, 0.3, and it's gonna be boring and no humans are gonna be watching.
Especially because you're in positive gamma. I would just think that you're just going to see that grind action higher.
Exactly.
Yeah, barring some kind of news release or anything like that. Why don't you run us through the indexes? We'll start there.
Yeah, so S&P closed up 0.69, Qs 0.88, small caps 0.89, RSP equal weight was up 0.7, Mag 7 was up 0.44. X US was up just a smidge over 1%, so nice outperformance there. Dollar down another 0.2. Now the dollar's at 99.58. Really lost some steam here as the rate cut kind of comes into focus. Bitcoin up 3%, oil up a little over 1, gas up about 2.5, gold up about 1.4, gold miners up almost 5. You had silver up over 5%. Wow, I didn't realize this until looking at it literally just now. Copper up 4%, and that is threatening a very, very real breakout. You're at $5.20 on copper. Yields essentially flat.
What do you
Very
think?
notable.
Hey,
Mhm.
T, I don't want to interrupt you and throw you off, but I don't want to forget to ask this. Copper is acting like it's sniffing something out other than just inflation. Would you agree with that? To me, it looks like there's some demand or anticipation of demand coming in from somewhere. Is that Chinese stimulus, do you think? Do you think that's data center building out here? What would we attribute that, or all of that?
Yeah, I think it's the supply is pretty tight. You have a major mine in Indonesia that is offline and may stay
Yeah.
that way for a while. But yeah, I mean the electrification trend is early days, not just in the U.S. but globally. EVs pretty similar. You know, alternative sources of energy all require a bunch of copper. Like pretty much you name it. The electric stack stuff I'm always talking about requires a bunch of copper. Uh, Air conditioning requires a bunch of copper, and that's expanding rapidly in places like Southeast Asia. Like it has tremendous demand, over the next decade, and not tremendous supply. So it just kind of turns into a pretty simple math game.
It's also kind of interesting if you think about it. In this world today, looking at prices of assets around you, you can buy a pound of copper for $5.20. And I know that's right. Is that an all-time high?
No, but this is a breakout level for sure.
Right. Okay. What is the all-time high level on copper?
I think it depends on how you want to look at it. If you look at the U.S. futures market, you got up to just under $6,
Okay.
but that was very, very, very tariff driven. So I would say X the massive tariff we had in place. You're basically there.
Okay.
Um,
But
Now, if you
but
go
pretty
look at the LME or Chinese futures or whatever, a little different pricing.
but pretty amazing. Like I said, you look at the prices of the things around you, right? Look how expensive a Happy Meal is and all that kind of stuff. And then you look around and go, you can get a pound of copper for $5. That's really not that. You know what I mean?
Right.
It seems cheap.
It's
And I
not that
bet,
different than it was, 4 years ago, whatever. And most
yeah.
things are a
Or
lot more expensive.
good God, go compare it to the price of a car over the last 30 years. You know what I
I
mean?
mean,
I mean,
in 2010, you were paying 450. So
yeah, that's nuts. That's wild. And yeah, think about how much the world has changed. Think about how much population has gone up. Think how many more things are going to be sucking up copper than were in 2010. You know what I mean? Well, I mean, you're going to have areas. You're not going to have another build out of China. I guess could be one of
no,
the arguments against it. But
not with that attitude.
speaking of which, what is okay? Yeah, finish the rundown.
Oh yeah,
I got us off
I
course.
I, I did want to mention Oracle because Oracle was up 4%, and that's become a bit of a proxy for me to keep an eye on AI risk. At the same time, though, Google finally let off the gas, down about 1%. You had Meta down 0.4, Nvidia up, but a little over 1%. You had Amazon down a little bit. So Mag 7 slash AI still not looking great, but it was notable to me that you finally got like a non meaningless bounce out of Oracle. And the last thing I'll mention is Vol down another 3%. Vol's been very uninteresting to me because it's been in the 20s for no reason. It felt like, but now you're sub 19, so I it feels like you can grind yourself to like a 15, 14 even through the Santa Claus rally, and then I think Vol, call it February, late January, something like that, starts getting useful as a hedging vehicle again.
Yeah, boy. I still every time I look at it's weird because I was just sitting there looking at value. I was checking out Apple, seeing where it closed, looking at Apple trying to break out. Look at that, just insanity valuation on that company. And it just leads me back to even the way these things are behaving, even the way that they're trading right now. I can't help just looking at the market and go, man, if you're playing a breakout here, for the first time in a really long time, maybe ever in this entire cycle, outside of 2022, but I don't think Qs are the way to play it. I just don't. I mean,
It may
I'm not
be,
saying to short them.
but
I'm not
like,
saying
but
to
I don't.
short them.
Yeah, I don't think they're going to dominate equal weight the way they have. They may still
Right.
beat equal weight, but I don't think they're
I
going to
don't think
dominate the way
so.
we got used to for since forever. They may
I,
still beat up small caps, but I don't think they're going to beat up equal weight.
I think at the very least, I think if this market is going to keep advancing, at the very least, I think these mega cap, meg seven names and such, they've got to spend some time absorbing uh these valuations. You know, I just there's too many other things that aren't fitting. I was actually on the phone with Dimitri this morning talking about this, and you know, you don't want to fall victim of seeing the thing you're looking for, and I'm really not I'm really trying to make sure I'm not doing that. But everywhere I look, I'm hearing the narrative of this is the fourth industrial revolution, this the beginning of the AI bull market, da, da, da. I hear all that, I understand the excitement, but then I'm listening to what the companies are saying, looking at what the companies are doing. Those things seem to be pulling apart right now. Reading an article coming out today that now Altman is considering using ads to generate revenue on ChatGPT. Now, listen, I'm not going to try to make a mountain out of a molehill here, right? But 30 days ago, everybody was under the impression, because this was what Altman wanted everybody under the impression of, that there's so many people trying to throw money at him. He's not worried about it, right? Now, all of a sudden, you're following Facebook, right? Okay, that doesn't make a whole lot of sense. Um, you hear the comments, we hear Jensen Wang now barking at every passing dog, trying to correct every analyst. You got Moss's son selling his stake. You got Amazon selling their stake. Like you said, again, I could be seeing the thing I'm looking for, but every single time I turn around, I'm hearing like something that at the very least makes me think that all of a sudden capital's a bit tighter than it was. And I know
Yeah,
you talked about that the other day, but then yesterday, just the other day, we were talking about it, and I see the Chat GPT article come out about the ads today, and I'm sitting there going,
exactly.
"This isn't fit."
It was a huge signal to me because I've been talking about like there's these weak signals that hey maybe like fundraising is not as easy as it was.
Mhm.
So for that, like obviously if somebody's willing to write the check in Silicon Valley, he doesn't need to do ads. So the fact that he has to do ads tells me that the check writing in the Valley is thinning out. Like people are getting concerned about ever getting their money back from OpenAI. So and I don't think we mentioned this, but Sam sent an like internal email out to the team at OpenAI basically to say like it's going to get hard. Like Google's jump here is going to be a problem for us. Like the vibes are going to get lower. Like basically like get ready to hunker down. Things are going to get a little tough. Which is funny because again, like when Brad Gertzner even asked about how you're going to spend all that money you haven't never made, like he wanted to sell his shares. Like to go from that to like, well, maybe we could sell some ads to keep the lights on is just it is to me very very indicative that you know raising money isn't what it was 6 months ago, a year ago, 3 months ago. It's for them now. Someone that can demonstrate that they're going to be making money in 2 years or something like, and it's credible. Like, yeah, I'm sure they'll still be able to make money, or raise money, but that doesn't mean OpenAI can.
Mm. Yeah, and look, I'm not making a prediction one way or the other there. Quite honestly, I'm not really sure what to make of it. What I know is that all of a sudden, in the last 30 days, something has shifted.
Big time.
The way the people, the way the folks at the companies are talking, the way the boards are talking, the way the CEOs are discussing things, the sensitivity to negative comments. I'm just sitting there going, What? It's like, who killed this party? You know what I mean? Like,
Right.
what's going on? I don't pretend to
And,
know. I don't
and
know.
that shift happened before the AI, relatively muted, but still like the drawdown we've seen in some of these AI equities, like this stuff started before that really became an issue.
Yeah. I speaking of which, and then you hear. also, of course, the magical thinking, and I think at least this is my view, and I know that you're somewhat, I think you're aligned with my view, but you can correct me if you're not. Um, on the topic of NVIDIA, um, you're going to hear a lot of people talking about NVIDIA, and usually you're going to hear what I'm hearing a lot of is, oh, it's a fraud. This thing's going to collapse. It's Cisco. That's on one side of it, right? On the other side of it is this thing's going to $20 trillion. They're going to dominate the world. Okay, I think both narratives are completely ridiculous. And I think it's a very unattractive investment right now. That is my opinion. And here's why. I'm going to use an NVIDIA bull that is kind of like a Jim Cramer, like anytime NVIDIA ticks red, everybody's wrong and it's market manipulation and this, the gods are against us or however you want to phrase it. Um, but every time it ticks red, this guy is out there slamming people and, oh, NVIDIA is going to dominate everything, blah, blah, blah. And he was sitting there acknowledging the TPU play with Google, and he walked through some numbers and he goes, okay, so let's sit there and say that Google peels off 10 to 15% of NVIDIA's business. That means they own 85% of the business. This thing's still cheap there. Da, da, da. Okay, here's the problem though, guys. And this has been, I think, our angle, one of our angles on NVIDIA all along. NVIDIA's going to sell a ton of chips. They're just not going to sell them at 70% margins,
Right.
right? Like, guys, if Google gets 15% of the market, NVIDIA will be selling the 85% at lower margins than they are right now. That's just basic economics, right? If you start taking market share for a market leader, the market leader's first reaction is to cut prices, especially if he's sitting on a 70% margin.
Right. And
And,
and there's already word that he's reaching out to all these teams and talking to them, and I think it's along those lines. It's like, hey, what do we got to do like to keep you, right? It's just like when you're trying to leave a car dealership, and next thing you know, they have a way better offer. Like I think that's what you're seeing.
Yeah, and guys, these are, and this is why we've said that I'll be shocked if this isn't a bubble, and that I think it has to be, because these are the types of things you need the narrative right behind a bubble, and you gotta have, and there has to be a real. Every good bubble has a real good truth component to it, right? It's got like a kernel, and then what happens is investors just stock on too many layers, right? They just build up too many layers on top of that kernel of truth. And I think that's kind of the case you're seeing in AI right now, which is if you think a company is going to dominate in one of the most secular sectors in economic history, chips. Now, like you and I talked about, they're probably going to become less secular as they go into more and more things. Or maybe it'll be secular, though just the swings from top to bottom will be more compressed. Who knows? We're speculating. But but bottom line, if you're sitting there looking at a company and you're projecting them to maintain 85 to 100% market share in anything and maintain 70% margins, and that's the numbers you're using to factor in your valuation, you're factoring in an outcome that no company in history has ever had. Right? Like that's never happened before. So, not saying it's impossible, but that's a really bad investment thesis.
Yeah, and something I'll borrow from Josh Wolf that I don't think people are thinking about enough too is there's a very real possibility that all the compute that we're doing now, like a lot of it migrates to devices. So, I mean, right now your phone sends back stuff, robots send back stuff to a degree, cars send back stuff to data centers for compute. But 20 years from now, your phone may do most of it, your car may do most of it on its own chips, and you may not need to have everything going back to some big centralized data center. And in that world, like some of the embedded winners, like an NVIDIA, may lose more market share than we are all expecting currently. And it's an area where I think Josh is probably right, personally. So that's something. There's a lot of little things like that aren't getting enough attention now that are a threat to this giant data center model of like, let's see how many GPUs we can fit in Abilene, Texas, right? Like on the surface, that seems weird as like a way to run the world in the future. Like almost like inherently, you're just like, really, this just seems weird. I don't know. So for me, when I look 20 years in the future, are we just going to have all of West Texas covered in data centers so that we can all like, make make pictures on our phone? Like I kind of lean towards maybe not.
Yeah, yeah, it's fascinating for sure, and nobody's going to be able to predict the direct paths and direct angles and trajectories and vectors that this thing takes. But boy, as of right now, I was sitting there having that conversation with Dimitri, and it was another one of those aha moments where I was like, I can't remember what specifically we're talking about, but it was like I said to you earlier. Every time I start digging into any part of this market, I just get led back to the kind of stuff that we're investing in. You know what I mean? It's like this circular investment logic that I feel like you just can't end up anywhere else. You're excited. Oh, one of the things we were talking about was we were talking about the very real possibility that markets are making a horrific mistake, acting as if America's markets and America's companies are going to be the primary winners for AI. Right. One of the biggest proposed benefits of AI is automation, right? China has way more to gain from that than we do. We
Right.
already
And
automated. We automated with China 25 years ago, right?
yeah,
Like that's
if you look at how many robots they have versus us, it's not close. I mean, they have like 80% of the world's robots, and we have like 20. Or like it's. I mean, it's embarrassing how poor we are at automating compared to them. It whether it's robotics, whether it's just process stuff, like it's kind of you name it. Like if
but
you
what
went
I'm
into the
saying,
average auto factory here versus there, they have way more. And when it comes to their focus on AI, their focus on AI is to do stuff like that. It's to like, cool, how can we make this robot work better? It's not like,
well, it
trying to
looked
make
like
Sky Daddy. It's trying to make a better factory.
right. It looked like another feather in the cap of your whole argument. Feather in the cap. That's kind of an awkward saying, but anyway, the whole argument about talking about the progression of China's economy, the advantages they have on us, and how people are kind of looking past that, and that's what I'm sitting there going, or the conversation that we were having about for some reason we're not looking at history and looking back at conflicts and looking at who won those conflicts and how if you're talking about competition, ultimately it leads to military conflict. And typically speaking, go look at World War II. Who won World War II and why? Manufacturing prowess, right? Well, same thing. The country that seemingly would benefit the most from AI and automation is the country that manufactures the most stuff, right? Like they're going to be the ones that see the most productivity boosts. They're going to see the most, increase in GDP per capita, right? Like that, they're going to benefit the most. And in a lot of ways, if you think about it, we got a bunch of the benefit that we would have gotten from automation from outsourcing everything overseas over the last 4 years.
Right. And that's why you have like this week it came out, Volkswagen was like, we think we figured it out. We're going to make the cars and we're going to make the cars in China because they know how to do it. It's cheaper. So like, that's what we'll do. Like, that's how we're going to make our cars more competitive. And it's like, yeah, duh. Like
Brilliant.
this is the world we're in now. Like, because they have all these, they have scale, they have,
Labor.
And because of the automation, the lack of labor, like I say, you go onto the average factory floor in China for like a car or a lot of other things, and you look at how many people there are. So this is a perfect example. GavCal talked about this the other day. Like how many cars they produce per person, per like employee is twice us. So like it's
Jeez.
obvious they're that much more productive, which means it's going to be cheaper. And now that they're innovating, they're coming up with cool stuff that we don't have. So you get a better product for cheaper. Like, and that's just the way the world is. That matters. And I know like a lot of countries would rather be our friend than China's friend, but you reach a point down the road where like you're like, man, I don't know, like I really like getting their really cheap, awesome stuff. Like a lot of people that are our friends today probably didn't want to be when we were. If you go back 100 years when we were, running around supporting dictators in Latin America and stuff, like we weren't necessarily the best guys in the world and like, on the moral high ground, but we made awesome stuff for cheap. So everyone's like, whatever, we'll be your friend. If you tell us to do something, yeah, we'll do it.
Beaver pelts, man. We had
And
beaver pelts.
I think, yeah, I think there's a lot of naivete, like where other people are like, oh, they're just going to be our friend forever. And they're not going to be China's friend. Like they want to be, but if China can come in and build plants and infrastructure and sell them amazing cheap goods, like they might pick them more than you expect. Like if you, I'll put it this way: a lot of people think we're going to split the world down, their sphere of influence and ours, and we're going to make everybody pick. And hey, most of our friends are going to pick us. I
Hey,
think people should be careful
Chase.
with that.
Yeah, yeah, I think you're 100% correct, and I think that's a really idiotic assertion to think to think that because, guys, we have our own politicians who have sold us out to China. If you think there are other countries that won't do it, I'm not even sure who in Congress would pass up on that deal, let alone other countries. And I mean, it's just really simple to see, right? If being our friend ceases to be in their economic benefit, it's all about how much, right? Every
Right.
country has a price and a point. And if we exceed, or if China's benefit exceeds that certain threshold, they will switch alliances. That it's
Right.
kind of like the old adage about Americans voting their pocketbooks. So do countries. Everybody does,
Right. And
right?
this gets more intense as we move along because their advantages, their competitiveness just gets better and better. So, and there's already been some back channel diplomatic stuff where we've put pressure on some countries that have kind of come back and been like, hey, just so you know, like, don't make us choose. Like, just put it out there. Like,
Hey,
let us keep playing both sides.
yeah. That's well, it's always that's the most profitable, right? Uh, but on the switching tracks just a little bit here, wanted to talk about the whole U.S. dollar relationship with stable coins. Right, it's a pretty hot topic right now. Um, I kind of brushed it aside as just kind of more nonsense coming out of the crypto world. But again, in my discussions with Dimitri today, he brought up a point that I hadn't really considered, and he goes, yeah, Zach, you're domestically, I don't think it's going to matter at all. But he said what it probably will see is significant purchases of foreign investors, where they're right, and the function of that stable coin basically is bring in your money, swap your money for dollars, right, and then create that coin that represents those dollars. So I mean, that is a selling foreign currency, buying U.S. dollars setup, right?
Yes, I'm skeptical of this because, like, for me, I struggle to see who can already do that. Like, now maybe there are some countries that would do this that I don't know about where it's hard to get dollars or whatever. But most places I've been to, and I've been to some unsavory countries, and you can go down to a local money exchanger and easily get yourself some dollars if you want them. And the other thing too is like essentially it's a T bill without the yield, which is a weird thing to me too. Like a lot of people are saying, oh, this is going to take over for the euro dollar market, which is just offshore dollar, you know, bank accounts essentially. But
Yeah, but with
why?
no
Like why?
yield.
Right? Why wouldn't I just want a bank account that lended me dollars or whatever so that I could get some yield possibly? Um, so a yieldless dollar. Now, the friction of transactions using it and stuff that makes sense. But what I do think it will help us fund our deficit a little bit. I don't think it's going to be a huge deal, but what every bit of demand for stable coins turns itself into a little bit of demand for T bills, which helps us keep our deficit funded. So I think
Well,
that
and I mean,
matters.
well,
But one thing,
and
hold on, one thing I want to add real quick because I don't want to miss this is it's already coming out in China that like there are companies that have sanctions or money laundering rules or whatever where they can't access dollars or they can't take them or whatever, but no one's stopping them from doing stable coins. So what we're defanging our own anti-money laundering stuff, our own sanctions enforcement, because think about like we're trying to stop this oil trade and stuff. Like, well, you can't use the dollar system, but nothing's stopping some of these people from using the stable coin dollar system. So in a way, like you're just wide open, to black markets using it, which that is you have some net positives, but then there's some net negatives like that I think people are ignoring.
well, hey, the question comes now. Everybody will stand up on a soapbox and make a good sermon about it. But the next question would be: do any of the powers that be really care if the black market is using it? And the reason I bring that up is if we lived in a financial system and an economic world that is based on flows, which I think we do, pretty financialized, right? Then flows are king. And if flows are king, and you're trying to keep your economy on track, why do you care where those flows are coming from? You know what I mean?
Yeah,
Like on a macro level, I don't know if you do. You're gonna talk like you do, but you could. I mean, you could give what is it? Sodium pentothal? Is that the truth serum? Sodium pentothal, isn't that what it's called?
I don't remember the name. Yeah.
Anyway, you give that to any one of the last 4 or 5 Fed heads, and I bet if you ask them, hey, if you guys had to facilitate this percentage of black market business to stave off a recession, like not the Fed, right? They wouldn't be facilitating, but if the economy needed, let's say, 7% of GDP in the economy to come from black market, activities, and if you had that, would stave off recession, would you be okay with that? I bet every Fed head alive still would still say, yeah. If you, and if you give them true serum and get them alone. Now they're not going to say that on camera. I wouldn't expect. But anyway, just an interesting thought. I thought, that whole the money laundering, know your client, all that kind of stuff. In a world full of flows, I have to believe that they care increasingly less about that.
Maybe, but from a foreign policy perspective, 30 years ago, if you arrived the U.S., we would drop bombs, or troops would be, on your doorstep. Now we're not doing that. So what we do is be like, well, you can't use dollars, and then people are like, oh, we're our bad. Like, we'll get in line. Or if they're Russia, they're just like, yeah, whatever, we don't care. You can have our FX reserves. But if people are able to, now maybe we close off all these avenues, but for now it seems pretty open, where people that can't use the SWIFT system can use these. If people are able to just subvert your foreign policy, your ability to hit them over the head with removing them from the dollar system, if you just re-dollarize them, I think that matters to foreign policy. Another thing I'll say is there are some people that think China will start their own stable coin. Instead of tying it to the dollar, they'll tie it to gold. And then you have like these competing stable coin systems. And, from my perspective is there's so much muscle memory on the dollar that, if you go into the third world or whatever, like everyone would much rather have that than what they got going on. But this year, a lot of third world currencies are beating the dollar. And then we see policy today versus, not that difficult to forecast policy for the next 20 years. Not great for the dollar. So like for me, like I'm curious what, like, if we just start lighting the dollar on fire to some degree, and I'm not saying, some collapse, but like, let's say the thing goes down 6% a year for the next 20 years on average, like, are they really going to want to hold that? Are they going to? Why wouldn't you just hold gold or, something of that nature instead of a yieldless dollar that probably is going down anyway? So I think that everyone's projecting the demand to just explode for dollar stable coins into the like 2, 3, 4, 5 trillion from whatever it is, half a trillion today, and I'm like, maybe, but not if the dollar becomes less reliable.
I don't understand. If I have a very hard time imagining a dollar-backed stable coin over the next 20 years being more desired than a solidly backed gold-backed stable coin. If looking at the world today, looking at the dangers and the risks and all the things that we know, looking at monetary policy, right? Looking at the IMF, the World Economic Forum, all that kind of stuff. The dollar, like, yeah, the dollar might give you a better level of protection than your local currency, but gold is what you'd want to own. You know what I mean?
Yes.
Especially if you owned it in the form of a stable coin, because now you just made transactions via gold frictionless, right? And transactions via gold, unfortunately, are they got a lot of friction,
Right.
right? Stablecoin takes that all out of it. I mean, yeah, having a dollar-backed stablecoin, I see how that's a more frictionless transaction with than just using US dollars, but not that much, right? Compared to gold,
Right.
the advantages that's unbelievable. And if I'm sitting in some country like Venezuela, would it be great to have a or a dollar-backed stable coin? Yeah. But look at the last 25 years. Look how much better off you would have been with a gold-backed stable coin over the last 25 years than a dollar-backed stable coin. Well, I mean, why I wouldn't anticipate it being any. It's going to be probably significantly worse over the next 20 years. So, yeah, you're right. I have long thought, and I know there are some out there, and I haven't really looked into them, but my understanding of is there's issues with most of them, and most of them aren't really liquid. But there are some gold-backed stable coins out there already, aren't there?
I do not know.
Well, there's gold-backed
Not
crypto. I mean, that's what I meant. I don't not stable coins. I don't know of a stable coin, but there's gold-backed crypto out there, right?
I honestly don't know. Maybe.
Okay. I thought I've
I
seen a
wouldn't be
couple
surprised
floating around.
if there is on some level. And the beauty of stablecoins is they tend to be backed by something. Now, usually not, in the case of like Tether and stuff for years, like not that well audited or illustrated, but some of the newer ones, the dollar stablecoins, and because of the Genius Act, they have to actually show how much reserve assets they have to back it and all that kind of stuff. And to be clear, like China is not saying, "Hey, we're going to do this." It's like it is speculation from people that they think they're going to do it. But I would say if dollar stablecoins take off, like my assumption is you find in no time either yuan or gold or hybrid Chinese stablecoin, and you get a euro stablecoin, and like it just becomes a thing everyone decides they have to do. And I think everyone just dollar bulls assume like, oh well, everyone will pick the dollar one because the dollar's awesome. And because of my FX views on the dollar for the next 20 years, I kind of think even a euro stablecoin would outcompete dollar stablecoins. So we'll see. And yeah, like some countries, it's hard to get your hands on dollars, and that's where a lot of people buy crypto. So I could see, people in rough places grabbing stable coins, but
What is the
they,
advantage for the people with the dollar-backed stable coins? How do the issuers make their money? Is it just by giving the coin? Is it just off the coin, or do they keep the yield of the treasuries?
they'll keep the yield. And it's like being a bank. You get to
Yeah.
capture the spread, and then obviously there is some some transaction charges and stuff that you can make some money on. But you
You
can
know
look.
who
I
I
mean,
mean.
Circle's one of these. They went public and got smashed after they went public.
Yeah,
So like,
yeah,
it's
yeah,
not like
yeah.
you can't figure out how well these people are doing.
You know who ought to launch a gold-backed stablecoin is GLD, the company that owns them. I forget the name of it,
Yeah,
but
why not? Right.
I mean, think about it. They've already got the infrastructure in place, right? To buy the gold futures for every dollar that comes into DT. The stablecoin setup has got to be very similar. I mean, different tech, different ways to do it, but I mean, in terms of the infrastructure needed, right? Because every dollar that comes into the stablecoin has to be used to buy a corresponding amount of physical gold, or options contracts representing that gold is how GLD does it, I believe.
And the answer
Doesn't
is yes. There are several gold-backed stablecoins, though they differ like a bunch in the way they're regulated and custodied and all that kind of stuff. But there are at least, I just found like a dozen quickly on a very fast search. So that's already a thing. So again,
okay.
why, yeah, why wouldn't people want that instead of a dollar one, other than
Yeah.
some deflationary wave
Well,
that
yeah.
spiked the dollar?
Yeah, because the reason they wanted dollars as opposed to gold was not because they didn't like gold. It's because dollar was far better than their local currencies, and the dollar has less friction, far more frictionless transactions. Well, if you take the friction out of owning gold, I just yeah, I don't. Every time I dig into that one, I have a hard time seeing that. Now, I guess you could make the argument that potentially dollar-backed stablecoins and the proliferation of them might slow down the decline of the dollar some.
Yeah, I think that is a fair assessment from the people who are bullish about it. I don't think that's a crazy way to view it at all.
And I wonder if that's one of the reasons that the folks at the helm currently are very pro the launching of stablecoins. I wonder if that's got to be one of their. I would think that'd be one of the reasons.
Yeah, I mean, it helps you fund the deficit, which is a massive deal. Somebody's got to buy all those T-bills, so why not try to make some crypto nerds do it, or some desperate cat in Bangladesh that's trying to keep their money sound or whatever.
Yeah,
Um,
yeah,
so and then it's kind of like Eurodollars where you know spread your currency throughout the world, which offers you some some political and soft power and stuff like that. That I think people, like policymakers like to have those levers, but those levers go both ways. Like if there's ever some sort of squeeze or dollar shortage or whatever, like next thing you know, all these people are feeling it, and uh, I don't know.
You know,
And and
one
and,
other.
and you got to be careful because other countries might just start levering them up and building ecosystems around them that you can't control, and like I don't know.
Yeah, yeah.
Nobody's thinking about the
It's
risks here.
no, and there's so many different variables. Okay, one last topic before we go, and then we'll let people get to the festivities at hand. It is oh yeah, we're way past it. I mean, I'm ringing the bell. It's Thanksgiving, man. Party on. Anyway, one last note I did want to get to because I was thinking about this. We've been pounding the table on Google for a long time. It has been our largest single position in the portfolio for quite a long time. The one thing I was thinking this morning, and if you disagree, I don't think you will, but go ahead and voice that opinion if you do. Um, one thing I just wanted to be sure, because I'm sure there's people that will listen to this that have bought Google based on the things that we've said. Um, I still love it going forward. I think it's great. But the bottom line is it is far less attractive as an investment than it was when we got in it. And I think we looked it up the other day. I think we really sized it up. We'd been in it a couple times before and made some money, but I think we really sized it up about 132% ago. Um, but you just go back and look at the value where it was trading back then, right? It's just you were looking at an 18 price to earnings ratio. Today you're pushing 32. It's a completely different ball game, and I am not advocating selling it. I love it going forward. One thing I was actually going to talk to you about though is that I do not think that it is the kind of stock that I want in the same size in my portfolio that I wanted a year ago.
Right.
Um,
I mean, you know me. I like to use two things for this outside of just the obvious, like fundamental stuff. But like for whenever you start feeling like something you love has gotten too far too fast, maybe is obviously the RSI, but also like how far is it away from its 200-week moving average? And at this point, Google could get cut in half and be above its 200-week moving average. It's like
whew,
53% fall it takes to get there. Like that.
that's
That is not
probably
where I like to be big and stuff.
that's probably the most it's been above its 200-week average, I would think, probably ever. No,
Just a
maybe not.
quick,
It
just a quick look at the chart. I think it probably is.
really, wow.
At
Yeah,
least
that's
going at
pretty.
least going back to like 2018.
Now the one interesting thing I will say about that is Google is also one of those companies where it is not hard at all to forecast their growth rates to continue on where they're at, if not even potentially accelerate. I mean, you still don't have that chip business priced in. I don't think I think everything else is priced at a healthy, respectable margin at this point. I think it's hard to look at Nvidia or at Google today and saying that chip business is priced in. Now, I think it would be premature to hang some big value on that chip
Right,
business.
right,
We got to see what happens. But this thing trading where it's at, when you do a comp to the other, its other cohorts in the Meg Seven. I mean, go look at Apple and tell me the chip business is priced in at Google. It's just not.
right.
So I think they're huge movers that could push Google, right? Look at the deal that they're doing with Apple to put Gemini on the smartphone. I mean, you can still see so many catalysts. At the same time, I will remind people, those of you that are the most bullish Google, e- every dollar your company goes up in value is every dollar harder it is to grow, right? Like the ship just gets going the ship gets so big that you launch a business that within 5 years has turned into a $50 billion business. That's incredible. That doesn't move the needle for these guys, right?
Right.
I'm not saying 50 billion in annual revenue that would move the needle, but I'm just saying 50 billion in that's a healthy business, a business doing 15 to 20 billion in revenue a year, valued or 10 billion in revenue a year, valued at 5 times revenue, 50 billion. That's an incredible business. That's a big business, right? It doesn't move the needle for them, and it gets tougher to grow as you get bigger, and that's one of the things that those lofty valuations kind of concern you. Again, I'm not Google's not at a place where I'm concerned, right? A company with those margins growing at 13% a year. I'm not sitting there going, oh, it's overvalued, sell it here. I'm just saying, I do not think it is appropriate. Whatever size you had on this thing 6 months ago, um, in my opinion, it's probably appropriate to scale it back a little.
I'll sum it up. The show's called Know Your Risk. Your risk is different today at $320 a share than it was 7 months ago at $150 a share.
100%. Yeah. That's a very well said, sir. So yeah, guys, and the old adage, you can't go broke taking profits. So and you can lose those profits very quickly. Ask our friends in crypto. Hey, by the way, where did Bitcoin close? I didn't ask you that. Did they close above 90?
You're at 90 at the very moment. You're at 90,190, so just above for the moment. But I mean, now you're like 9%, 10% above the low now, so it is stabilized.
Where's an important level for that? What level are you watching on Bitcoin right here?
So we bounced
Kind of a
off a big
chop
level.
fest, isn't it?
We bounced off a really big level that it needed to hold, and it was a deep test of that. The next big level to me is 93,300 and change. Like above that, and it starts looking like it's going to be just fine.
Okay. So you'd sit there and say you get above 93,000 and hold there. It looks like clear sailing for Bitcoin.
Yeah, and I just looking at it right now, I think it's actually probably going to be fine.
Okay.
I mean, it shook people out. Like that was an event. Like you had the biggest outflows. Obviously, they're not that old, but the biggest outflows in the history of the ETFs. Like you had a bit of a true like washout, I think. So the fact that it's stabilizing here, sentiment positioning got smashed. So I think it's kind of we cleared the decks to move higher.
What a bunch of weak hodlers, man. Come on. You guys got to hodl this stuff, right? You're not reading the script here, man. Anyway. All right, pal, you got anything else for us?
Nope, good to go. We'll see y'all on Monday.
Yeah, you bet. We are taking the day off on Friday. Well, we're going to be trading, but market closes at 10 and we're not going to stick around the office for 3 hours to record a show. So
I don't think anyone's going to listen anyway.
I don't think anybody's too worried about it. No. So anyway, you guys have a great weekend. Have a wonderful Thanksgiving with your families, and we'll see you next week. As always, you can follow us on social media at KYR Radio for me and at Pinecone Macro for Chase. Video feeds are always available on YouTube at Know Your Risk Podcast, but not this week because our man, the fearless millennial Darren, is out of town. But we will resume the video feeds on Monday. So have a great weekend, great Thanksgiving. We'll see you next week. You're listening to Know Your Risk Podcast. Download and subscribe to KnowYourRiskPodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.